we are seeing inventory increases, the likes of which I have never seen in my career. And I'm talking about on a company by company basis. So Walmart, as Nancy and I mentioned in this last YouTube video, Walmart sales up 3% on a comparable store basis year over year, which means they were probably down in unit terms. Inventory is up 33%, which probably means in real terms, taking away inflation, they were up 25 to 30%. Well, that's interesting because more than half of Walmart's sales are in groceries, and you're not going to see huge inventory buildups in groceries. And so what does this say for the other half? Are their inventories up 80%? It's kind of crazy to think that that's a possibility, but it's a possibility. And Target's inventories were up 42%. Now it has less in the way of groceries as a share of the total. So 42%, maybe if you X groceries, was up 50 to 60%. These are crazy numbers for two of the best managed companies from a supply chain management point of view in the world. And surprisingly, auto sales. Now, the auto manufacturers finally are getting through supply chain issues. Their plans were to increase production, or they're in the midst of increasing production to something like 20% this quarter. And what we got this week was kind of surprising. Auto sales dropped back down from 14.3 million. Now, steady state is 17 million. So they had not even gotten back to steady state, which is 17 to 18 million. And that's an annualized unit rate per year for the US. So 14.3, and the expectation was that that would just continue on up to a more normalized rate. Well, instead, in May, it appears auto sales dropped 12.7. So here we are again. If they build the inventory and the consumer does not come, in fact, the consumer retrenches, these companies are going to have too much inventory. What a surprise given all the supply chain issues we've been hearing about.